Let's take a look at how the Asian markets are panning out. Remember, the Shanghai as well as the Taiwanese indices are shut yet again for the entire week on account of the Lunar New Year. So among the indices which are open right now, they are lower in trade, and that's primarily on account of fresh concerns coming out with regards to the US-China trade talks. CNBC, the parent company, knowing that or getting to know that Donald Trump will not meet Chinese Premier Xi Jinping before the March talks come by. And this follows commentary coming in from Larry Kudlow, who said that there's still a fair distance away from any development on the trade talks or any resolution out there. This comes just a week after Donald Trump or sources from the White House did indicate to a lot of media sources over the world or media organizations over the world that there is a fair amount of headway made with regards to resolution. So yes, yo-yoing continues out there with regards to whether China and US will go ahead and resolve the trade issues. So Nikkei lower by about 1.5%. You have the Korean markets lower by about 1% as well. However, the SGX Nifty is slightly more cautious or slightly more steely in terms of its cuts, down by only 44-45 points. And this is because when global trade tensions do resume, it's the crude oil prices which fall. So yesterday we saw crude prices go below the $62 per barrel mark.
Well, similar was the case in US markets as well, because they closed in the red, in fact sharply lower, as investors digested possibility of no trade deal between Donald Trump and Chinese counterpart Xi Jinping before the March deadline. Even the subdued corporate earnings failed to really lift the market sentiment. For example, the Dow tanked over 220 points on close, and the Nasdaq also lost close to around 90 points. CNBC's Josh Lipton gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks ending the day lower. The Dow shedding 220 points, the S&P down 25, and the Nasdaq lower by 86. Two of the nation's largest regional banks are joining forces. North Carolina-based BB&T is buying Atlanta's SunTrust Bank for $28 billion. The all-stock deal will create the sixth largest U.S. bank based on assets and deposits. The acquisition will also be the biggest bank deal since the financial crisis. Food and Drug Administration Commissioner Scott Gottlieb said he's putting pharmacy chain Walgreens, quote, on notice for allegedly selling tobacco product to minors. The FDA says Walgreens is currently the top violator among pharmacies that sell tobacco, with 22% of inspected stores being caught illegally selling tobacco product to minors. New York City's police department is demanding that Google remove all DWI checkpoint information from its Waze navigation app. The city's law enforcement officials argue the app helps impaired and intoxicated drivers evade checkpoints. While the app does not allow drivers to specifically identify sobriety checkpoints, its police reporting feature does allow users to leave detailed comments. That's the action from the U.S. market. Now back to you in Mumbai.
All right, so that's what took place on Wall Street, but let's hear out some opinion coming in on the global markets going forward.
We're finding opportunities in other markets. Emerging markets specifically is an area that we think can be really interesting right now. You talk about some of those trends that did reverse, which caused the sell-off, meaning the Fed potentially risking over-tightening, what that meant for the dollar. That was obviously a huge headwind for China and emerging markets broadly. The other thing to keep in mind from a stimulus and policy perspective, China took advantage of the strength that we saw early last year to tighten policy, both monetary and fiscal. That's obviously shifted. The work that we've done tells us it usually takes about 6 to 9 months before that really feeds through to the economy. So we saw late last year was the impact of that tightening. Now I think heading into this year in an environment where we may get a weaker dollar, that could be a good sign for China and emerging markets more broadly.
This is my concern. We didn't move enough on the upside. We're at a point where it's beginning to bite, and there's not much to give back. You want to have money in your pocket to spend. And what that means in Fed speak is you want to be able to cut rates to mitigate a downturn. Inflation is not the issue here. Would deflation be the issue in the future if we had a weak economy? Possibly. We have the possibility here of at least holding still for quite a while. We'll see what happens in the global economy, but we'll see if it infects our economy, and we don't live in a world all by ourselves anymore, so it's a high probability.